Okay, so diving into the first finding, which is morality of taxation via the cost-benefit ratio, there are several different arguments for and against this for the morality of taxation. Specifically, the cost-benefit ratio is the main argument for taxes. So Nardi, in his 2023 work, page 19, defines the cost-benefit ratio as the cost being the number of people harmed, the benefit being the number of people helped. And the fact that if more people are helped than are harmed, then he says that the taxation is good, or you can use it and it's applied to a specific tax code. So if a specific tax helps more people than it hurts, then it's good. And the reverse is also true according to this ethical theory, that if more people are harmed than are helped, then said tax is bad. The other argument that Nardi puts forth is the pro-tax argument, that if the tax is working as intended, then it's good. If it does not work as intended, then it's bad. And the weakness of those arguments is that it makes the assumption, the weakness of the cost-benefit ratio argument specifically, makes assumptions on the number of people that are harmed. So it might look at things like the number of people that lost their homes due to property taxes being much smaller than the number of people that didn't, and therefore it says, well, since the government's helping a lot of people and taxes are one of the main ways that it gets money, then if more people are able to pay than aren't able to pay, then it's still a good tax because most people are less affected. Most people aren't hurt by this tax because they can pay it. What it does not take into account are the fact that increased tax burdens through either the number of taxes or through the increasing of said taxes that are already in place hurts the poor person. It makes necessities like toilet paper and food less obtainable. It puts a tighter crunch on families, and it limits, say, their ability to go places, the ability to pay for fuel. It limits sometimes their having to put bills on credit cards. Well, then the credit cards come due and they can't pay those, but the tax, even though the tax causes, or say, for example, an income tax, because they're getting less money now on their paycheck due to an increase in income taxes, well, that now then puts a strain on their other finances, and now they can't afford groceries, and now they can't afford gas to get to work, and if they didn't have that tax, then they could. So it doesn't take into account the overall effect of those very hard and I would say almost impossible calculations on how the taxes affect the general population, especially the working class. Higgs puts in his 2017 work on page 478, puts forth an argument against the cost-benefit ratio.